Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We're going to talk about the coronavirus and earnings. We are getting into the thick of earnings season now. The big guns start reporting after the close today. We'll talk about a number of reports we've already gotten and preview some of the big reports we're going to get after the close today and later on in the week. Our guest today, Nick Chahine. He's the author of Create Income with Option Spreads and sellspreads.com. He joins us every other Tuesday at 8:35 to give us his thoughts on the market and some options plays for the week. You can always give us a call as well. Leave us a voicemail, 734-494-0246. Joel, what's the word here overnight?
Spencer, we're trading up 18 3/4 handles. We've had a 25-point range overnight. Open right near the close. Your close is 39.50. You take 38.75 and boom, it was off to the races. Your pre-market high 63.75. Let's see if Monday's Globex high comes into play here. 69.75. So that's a target on the upside. On the downside, really, the only thing you have is mid-range on the session, and that's way down at 51.25. So market very resilient this morning. Crude in the green by 27 cents at 53.41. Gold in the red by 4.70 at 14.7270. Silver back under 18, down 18.8 cents at 17.87. And you can put a 9 on the Bitcoin futures now, trading up $55. These are the futures. 9,050, folks. We got volume coming into these Bitcoin futures. I don't care if you like them or don't like them. You can't find value in them or not. The volume in the open interest is going up. And when I read my Edwards and McGee textbook, when open interest goes up with increasing volume, that's bullish. So, hey, 10K, here we come in Bitcoin. How you doing, Dennis? Did we lose Dennis?
I am trying to find it. So when he grabbed the Skype thing, it moves on me, or not the Skype, the Zoom video, it moved on me, and I was trying to unmute myself because Spencer mutes me because he doesn't want me talking over him. He should do that more often during the show. Then I wouldn't talk over you as much. When I talk too much, just put me on mute.
Is talking and we want to talk, and you just mute him.
Just put me on mute. You should have learned that a long time ago. You could have learned that 3 years ago, Spencer.
Choose not to. Yeah.
But anybody give me that mute button, man. Where is it? Which one is it?
So
you have your own mute button, Joel.
No, I mean
I have a lot of thoughts.
Oh, okay.
I have a lot of thoughts. They're obviously just thoughts, but I don't know. Maybe I'm just spooked about this virus. I never get spooked about stuff like this. So I wasn't spooked with SARS. I wasn't spooked with Ebola. I'm completely spooked with this virus. And maybe it's the social media aspect. You know, back when SARS was a thing, there wasn't as social media wasn't as, or maybe not even in existence really yet. I don't think Twitter was. So maybe it's the fact that I'm seeing all this stuff, but I was watching videos coming from China.
That's definitely it.
Yeah, it probably is. And I'm trying, like I haven't sold anything out of my investment portfolio, and it's all in my power not to sell here today because this is a nice rally, and I am spooked because I saw those videos last night of people taking videos of people in the hospitals in China, and I've never seen a hospital packed like that. Like they were wall-to-wall people in the halls. People can't even move. If that's all true, and I don't know who would make up a video like that, it is scary. So anyways, this market cares nothing about that. It seems like the S&Ps. So give us the details overnight, Spencer. We have a lot more cases, a lot more countries. It is spreading more rapidly than it was yesterday, but the market doesn't seem to care.
Yeah. So if you think back to SARS, and I was young, but even I remember this, that one of the criticisms was that the Chinese authorities were not forthcoming with information. Right off the hop.
Yes.
And by the time they were forthcoming, it had already really been contained, right? So they weren't forthcoming with information to other governments, to the public, and we definitely did not have the quantity of videos and images that we do now. So that's definitely fanning the flames a little bit. As far as the numbers, It's getting worse. The number of confirmed cases rose 60% Monday to Tuesday. We're now at around
60% from Monday to Tuesday
We're
goes
at-
up, and the market rallies.
We're at around 4,500 confirmed cases, and over 100 deaths now in China.
How many confirmed cases total, like worldwide now?
4,500 about.
How many were with SARS back in 2003?
About 8,000.
All right. So we're going to be, by the projections here, and I mean the way it's going, it's safe to say that we're going to probably be 8,000 by the end of the week, because this is not going down anytime soon, and they're just still climbing. I mean, we had, what, 2,000 more overnight here, roughly?
Yeah, roughly.
1,300 in China plus elsewhere as well?
Correct.
Because we were around 2,700. So what? Maybe I'm a little bit high. Maybe in the 1,800, 1,700 more cases.
I mean, we were at 2,800 yesterday. We're at 4,500 today.
So 1,700 more cases overnight, one day. And I mean, this is the confirmed cases. I'm watching in the media, and they're saying that, you know, this is tens of thousands of cases, that this is being drastically underestimated. Now, again, SARS was more deadly, which is the one good thing about this virus. It's not quite as deadly as SARS was. If they're saying 3% versus, I think SARS was 10%. But I just look at this and I think, wow, you know, this market, is this a gift here today that we're, you know, the fear of missing out, the earnings expectations, like you can understand the drivers. It kind of makes sense. You know, we didn't have any more cases reported in the US. So that's not going to spook US investors as much. I mean, they're saying there's some unconfirmed ones. I heard in Pennsylvania, you were hearing Michigan, Joel. I mean, it's likely that there are going to be more cases, but it's not, you know, continuing to spread here, at least yesterday. So maybe that's a reason that the S&Ps are really rallying, and they're bringing the overall market up with it, like the other markets as well. But you also have Apple earnings coming tonight. You got Microsoft coming this week. You got Amazon coming this week. So lots of good high expectations for earnings season. So FOMO is real here still. And people see that dip and they're like, this was the opportunity. I got to get in. I think, in my opinion, I think these people are going to be wrong. I don't know when it all comes to roost, but I think when we look at this market in 2 weeks, if this thing continues to spread like it is, I think the market is substantially lower. So maybe you get a lift on Apple earnings tonight. Maybe you get a lift. Maybe even, who knows, maybe in the next couple of days, maybe you could even retest the highs. I mean, we're only 2.5% away from there. But I am going to probably lighten some up or buy some protection. I never buy protection on my investment portfolio. But from what I've seen, I'm just scared that not only about the virus coming to North America, what does this do to all these companies' earnings for next quarter?
Multinational companies.
With the multinational corporations, I mean, China is basically, for all intents and purposes, shut down. I mean, there's not much happening there. Joel, can you talk about your friend? You talked to somebody in Beijing yesterday.
I know, Dennis, you sent me that thing last night, and you know, I went and I looked at it, and you know, there are numbers and they are, you know, statistics, but to me, you know, I look at the source, kind of like in the markets, and it was a guy with 600 Twitter followers, and it was a spreadsheet, you know, that showed this, this, and this. So, you know, I took it with a grain of salt. I put in some sell stops when I went to bed, and, you know, to get short if we went down. They never got executed, which I'm glad. I have a buddy over there that I follow the markets with, and he is not in the heart of the storm. He's in a large city outside of Wuhan. And when I asked him how he was doing this morning, he started talking about the SPUs in the S&Ps. He's been in his place a lot over the last week. He's gone out. Usually when he goes outside his place, he sees, you know, a couple hundred people. He sees like 10 or 12 people. People are only, you know, doing what they can. They're not going to public places. And as far as these the hospital things, he says a lot of people are going to get tested. You know, so you know, and of course you would. So, you know, if you're being tested, then, you know, if you're okay, then they let you go. If not, they keep you. So that's what, you know, he's seeing from the hospital situation. He you know, when I asked about the rows of dead bodies and stuff, he was like very skeptical about that. He's following the social media in China and getting information out of there. You know, but he also is saying that, you know, things are shut down for the holidays anyways.
Yeah.
Right. So you have, you know, a situation, someone who's a lot, you know, closer than, you know, Ontario, in the eye of the storm, and, you know, being very calm and not nearly as worried as you are. So,
So everything I'm worrying about, and there's people in the chat that are upset that I'm talking about this stuff. I'm trying to give market perspective here. So it's my job to, the fears are one thing. The other thing is, and fear is a real thing. I mean, you can be scared about it. It's not like, you can't control your emotions, right? So I'm talking my emotions here. But I'm not saying I haven't sold anything on my long-term portfolio. I'm saying it's taking everything in my power not to. But let's see, I'm trying to look at this from a realistic perspective. So China, maybe it's shut down. Maybe this doesn't even affect their GDP. But with this many people sick, with this much going on, I got to think it's going to show up in some multinational numbers here. There is fear over there. I mean, there's a lot of people infected. We saw what happened with SARS. We had 8,000 cases with SARS. We're going to blow that out of the water here. We can safely say we're going to blow 8,000 out of the water. Yes, it's not as deadly, but there is already 104 people dying. You could easily see how this could get into the thousands of people dying if they don't get this thing contained soon. And SARS, how much did we fall, Spencer, with SARS?
I don't have that in front of me.
I feel like it was like less than 20%, but it wasn't, and Ebola was significant as well. So we're down 2-3%. If you're worried about it, you can almost get out at the all-time highs here. I mean, and what I'm looking at, I'm like, maybe I should just lighten up. Maybe it materializes into nothing, but if it does materialize into something, I'm gonna be happy that I raise some cash. So that's what I'm looking at, is potentially raising some cash, because if we do dip eventually on this virus, when it starts to show up in North America, which I believe it is going to, not saying, everybody's gonna die, not saying it's the end of the world, but I'm saying this could impact the markets. And that's our job, is to look ahead and try to figure out what's going to impact the markets. This is a real thing. It could impact the markets. So I think raising some cash here is prudent.
And I'm hearing Dennis in the chat. I don't know what you were looking at, but a lot of people respect, your opinion, our opinion, Spencer's opinion, and it's market. Well, Spencer, you're not saying much. I mean, it's something that could affect the markets. I mean, it's something that you have to look at. Me, I'm a super worrywart. I'm always looking to short the market, and I just, I thought about it last week, and I'll still look at things today. But the thing about it is like, you got to be in, because that if something is going to evolve, there could be some intraday news, but the big, if it goes to 10,000, tomorrow night, which is probably prescribed to go to, you got to be in. But, right now, I mean, there's a lot of green on the screen, and, price is your best indicator.
Okay. And there's a lot of reasons to think like that this market could squeeze. I don't want to just start shorting everything here. Like, even if I think eventually we might go lower because of this, we got a lot of catalysts to bring us higher. Maybe we should move into that. So it's not all just doom and gloom here. I'm not trying to be doom and gloom. We talked a lot yesterday about it because we need to talk about it. We talked how to trade this. We talked about the coronavirus stocks. I mean, if you were trading those coronavirus stocks, those things, some of them blasted off yesterday. Yes, they're coming in here this morning because I guess the fears, are coming down here somewhat, well, obviously with the overall market rally as well. But, a lot of these things really moved yesterday, and Spencer's and Benzinga have given us an excellent list. I mean, there's good trading opportunities in these things. There was a few of those stocks, like VIR was trading up $7, $8 on a $20 stock. There was that APT we were talking about, and I was trading that one. From 6 to 8, it moved. I mean, there was big moves in this stuff. So even as a trader, even if you're not worried about health or worried about everybody or contagion, you just have to understand what's the market dynamics that are happening out there. There's a lot of balls being juggled here right now. But when I see the videos of what's happening in China, I got to think that's eventually going to impact some multinational corporations. So that's why I worry about next quarter and maybe some warnings coming here. I mean, obviously the market's worried about it too. That Wynn Resorts fell 30 points in 5 trading sessions. So some of these legitimate worries. That's 20%.
Ed Seeking Missile, he's asking about, you're definitely not putting any money to work. You're talking about, you said that yesterday.
I am not. And maybe I'm wrong. I mean, if they shrug this off, the earnings are all good and they contain the thing, and we get a vaccine right away, I'm going to be wrong. And I hope I'm wrong. I really do. But I don't know if they're going to contain it as well as everybody, at least the markets, think they are. That's what I'm worried about. So I'm not buying the dip. I haven't sold anything. I haven't bought anything. I'm still trading market neutral. So that's telling you I'm not that worried. If I was that worried, I'd be liquidating my portfolio and buying puts. But, if we get a significant rally, let's say off the Apple earnings, Microsoft earnings, we get back up near those highs, be pretty tempting to maybe buy some protection, because protection will be cheaper then too.
Yeah, it's hard. Yeah, it's even cheaper today, but yeah, the premiums are still going to be elevated. It's the kind of situation, let's just hope and pray that this thing is contained.
I hope so too.
I talked to my wife, Lisa, yesterday about it. She just, she's a physician. She has people coming in her office and stuff. And at this point, she's talked to other doctors and stuff. She's not ultra concerned. She's looked at the West Nile virus.
I think that's a good. If when Lisa is concerned, then I will be scared.
That's
there you go. Yeah. Let us know when Lisa starts.
If she's not concerned, I'm not concerned. How about that?
Yeah, but
I'm a trader, so it's a different story. I make my living trading, and I need to, if I think this market's going to start to get concerned about it, I make money by anticipating where the flow of money is going to come. So, am I scared that we're all going to turn around and we're going to contagion, everybody's going to die, and it's going to be like The Walking Dead? No. Even if this thing doesn't get contained, the death rate's only 3%. So, optimists would say, well, if the death rate's 3%, it means 97% of people who get this are going to live. So even if you get it, it's not the end of the world. You have a very good chance of still living. But I'm just saying the markets, if it starts to show up over here and we start to get some deaths over here, I believe the market will go down over here.
And just one last note from my buddy over there. He said lots of companies are asking their employees to work from home, once the holidays are over. So it's, they're
still getting work.
Chinese economy is not coming to an absolute halt yet.
And then just to put a bow on this, Dennis, your question about what the market did for SARS, within 6 months, the S&P was up 14.5%. So
what did it do? But what was the dip? We know it was different.
I don't know about the dip.
The market was still in the gutter from the financial crisis, so we were continuing that, coming back from where we were. Oh no, I'm sorry.
No, SARS was
from the tech bubble, 2003. I was
right. Yeah,
with Ebola.
Well,
I'm just saying long-term market went higher.
Well, I just want to tell you, I've wanted to hedge a lot of our holdings over the years and stuff, and no.
It's usually the wrong move.
Yes, yesterday she said, "What about buying puts?" So she hasn't. I don't ever heard that.
So she's a little bit scared.
Yes, I've never heard that word come out of her mouth.
A little bit scared. That's a little bit scared.
Yeah. But
we all hope it gets contained. I hope it gets contained. I got a kid that has asthma. I don't want this virus coming here. So maybe, and my wife says, it's a little close to your heart too, because it's a respiratory illness. My boy has asthma. He struggles when he gets the normal flu. So I don't want him getting the coronavirus, because he could really struggle with that. So you have asthma as well, Spencer, although I think your asthma, as you get older, it's not as bad, right?
Yeah, it's not as bad when it's worse as a kid. So when you get older, it's not quite. I haven't had a flare up for quite some time.
Okay, let's do a normal show.
Let's talk earnings. Let's move on. But I just want to say is if we rally on the earnings, I might use that opportunity to lighten up my portfolio.
I mean, it's been a good run. We talked about this last night too. I mean, it's not like the market is in a trough. You talked about it late 2018 when you lightened up. The market was kind of flat, right? For the year, and then you had the crazy rally in 19. This is a different situation. So you might even be thinking, lightening up anyways. The market had an incredible gain last year, and it already added to it this year. So even taking this situation out, of going on, it's always good to think about the downside. It's always good to think about potential hedges. I mean, the market's not going to go straight up forever. I know some people think it is, but election year, a lot of things are going on. But
there's a lot of things happening.
Spencer is going to take over for now.
All right,
rest of the show.
Let's do some earnings. Some big names this morning, the real big guns after the bell today. But let's just start with let's do Pfizer here. PFE.
Sure.
They reported Q4 adjusted EPS of a 2-cent miss, 55 cents versus a 57-cent estimate. Sales was a slight beat, 12.7 versus 12.6 billion dollars. The guidance they gave for their fiscal year EPS was in line. The guidance they gave for their fiscal year sales was also in line.
And Pfizer trading down 2%. I'm in this long term. I've had Pfizer. I'm in it real long term. I've been in since $14. I bought it, I don't know, probably 10 years ago now. So I'm sticking with those shares. From a trading perspective, it's been a pretty good run from Pfizer. Like it went from this back in the summer, it went from 44 to 34. And if you want to talk like 50%, we're a little bit through that, but you struggled here around the 40. Now you pull back. I'm not necessarily buying the dip in this one today.
Well,
Although I'm sticking with my long-term
yeah,
position.
the only thing, Spencer, pull up the daily here. I mean, this is the way I'd be looking at trading down 81 cents, 39.36. That's a very large move for Pfizer, number one. Okay, so if I was like I was short, I total had a fade going into the earnings report, I would be waiting to see if this thing comes in under 39. You go back to the beginning of the year, 867, 870, 868, 879, 879, 890, 6-7 rows in a row. So if I could get this thing in under 30, I mean, it stopped there 6-7 times in a row. So that's my major support. I would love to bring that thing in. If I had a short, that'd be down $1.40. Like I said, the average daily move for Pfizer is what, 50, 60, 70 cents. So boom, I don't know. I just like that support under there. Hard to figure out resistance.
There's a whole pile of stocks that have reported here. We got a few last night. We've got some big ones here this morning. Let's go to 3M, because 3M was getting a lift yesterday because they sell masks. We kind of poo-pooed that, and it was really ridiculous when you think about it. I mean, I don't know what their medical mask business is, but it's probably less than 1% of their overall businesses, and so many other businesses were going to be affected by China. So I don't know who was buying 3M at the open yesterday when it opened up $2. That was immediately sold. So that was a gift. And 180, 179, 178, 177 closed at 175, and now they miss. So now the stock is down even farther. Give us the details for MMM.
What percentage of their sales is masks?
Oh, it's got to be really minute. MMM makes everything. I mean,
tape and masks.
Didn't have the greatest quarter. Their Q4 EPS $1.95, missed a $2.10 estimate. Sales $8.1 billion versus an $8.12 billion estimate. So they missed on both the numbers for the fourth quarter. The guidance they gave was fine. It was in line. They also said they're going to reduce their headcount by about 1,500 positions. They're going to lay off 1,500 people.
So not a great report. The guidance not great either, but the guidance is in there, so it's not like it's a disaster guidance. 961 were estimates, 930, 975, so they're kind of in there. So I'm kind of like me. I don't really see this thing getting killed here today. Maybe 170 gives you good support if you get back down there.
Yep.
That's right where we got to in the pre-market. I think there's good support down here now. There's still the mask trade going on. People will see this as a potential coronavirus stock, which I think is ridiculous, but it was obviously trading off of that yesterday to a certain extent. So for those reasons, I don't think it gets rocked.
Pre-market low 169.53. That coincides with a daily low that you had at 169.15. You bounced 280 off that, $3 off that level. I don't think you're going to get another chance to get it at that area. A low ahead of it. We've taken out 172.20. Let's see if we got anything else under there. Nah. 169.50, 170. That's pretty good support. On the upside here, you did have a quick spike up to 173, 174.70 after you made that low. I bet you that might have been an odd lot or something. But let's just say right now, let's call the short-term resistance right where you're trading here now, 173.50.
Let's go to UTX. It's trading down as well, although off the lows too. How'd they do?
Yeah, I actually want to do UTX and Lockheed Martin.
Let's do them together.
Yeah,
the combo, the pair trade, even though I don't know. Well, they're somewhat related, I guess.
Yeah, a little bit.
A little bit.
Let me pull up the chart here first. So UTX reporting Q4 EPS $1.94 versus $1.84. So that's a nice beat. Sales also beat, 19.6 billion versus 19.37 billion. So beat and a beat in the fourth quarter for UTX. Lockheed Martin, same story, beat and a beat in the fourth quarter.
I mean, Lockheed Martin is still your war play here too, and like we said, it didn't get as much press as it did, as it should have if it wasn't for the coronavirus. But we obviously had that attack on the U.S. Embassy yesterday, so I think these stocks still stay in favor. We don't know what's happening, or that's another ball that's juggling in the air. But LMT getting a lift here. The stock's been unbelievable. It just continues to go higher. I believe if it's not an all-time high, it's pretty darn close. I believe it is. So Lockheed Martin, I've always lost a lot of money shorting stocks at all-time highs, so I'm not shorting.
These $440, $450 stocks. I mean, it just seems like the defense industry, These stocks thinner traded. I mean, they jacked this thing to boom, 443.15. So you're $5 off the high at that. So it just seems they get a little bit overdone, and then they settle in during the day. A weight gap up. I mean, there just has to be some sellers at Ford. Never been up here. 439, 440, 440.
Yeah, it's a big psychological. 450 too, but we're not getting that high.
No, no. I would say if I could do some, reverse analysis, when these high priced defense stocks beat and have these big gap ups, man, I just don't think they hold a lot. I mean, they'll hold and maybe still be up on the day, but it seems like just some odd lots go off at those really high prices and we never go over there. But, never say never. And you said UTX, right?
Yeah.
Did I do UTX yet? No. That dip by the dippers came in again. Your pre-market low came in at 148.50. And I see, what do I see here? I don't see much there. I see lower 147s is major support here, but you're $3, maybe a little bit longer term support at 147. Bad day yesterday for UTX, coming off all-time highs. Anybody that tried to buy the dip on that yesterday is probably regretting it, probably trying to get out as well.
A lot of earnings here. If you've got a specific stock you want to talk about, again, we're in earnings season, so we won't have time to cover them all. We're just doing the big ones here. But if you've got one you want to talk about, let us know. Let's go to MKC. Spinner's talking about it. This is a mess here this morning. I know it's one of Kramer's favorite stocks, so he's not going to be happy about this. It's down 12 points here in the pre-market. What happened?
Yeah, and this is one that you're going to have to look into the filing, into the release, because the headline numbers aren't. I mean, they're not good, but they're not like this bad.
They're not a disaster.
The Q4 EPS was in line at $1.61, and the sales missed a little bit, 1.48 versus $1.52 billion. So you're going to have to look a little bit closer as to why it's down the way it is.
The sales missed. Yeah, so maybe there's some guidance in there. Maybe there's something else in there. So obviously we're doing the show live here, so it's difficult. And these did come out this morning, but I haven't died. There's been a lot of other things to trade besides McCormick report. Wow, this is a big dip for this stock. So until I know what they said with the guidance, I mean,
yeah, here I'm in the release right now. Hold on, I'm reading through.
There does look to be support, Joel, down here and right where it bounced in the pre-market. If you look at this pre-market chart, it's not surprising where it bounced at. 157.61 was the low back November 4th. You had multiple lows. Actually, you got like 4 or 5 different lows from October, November, right in that 157 area. So very unsurprising that it found to bounce there. I'm just surprised it's down this much. I mean, this is more of a lower beta stock. This is a big move for the stock.
Someone hammered this thing. I mean, they came out. You had a step down.
All right. I found it. Yeah. They guided their fiscal year 20 EPS. They guided a range of $5.20 to $5.30. Estimate was at $5.56.
So a little light on the guidance. They don't like light guidance, especially when it's stocks that I don't think the growth rate was ever super high in a stock like this. So they don't want to see that light guidance. They want to see stability. Stock was trading near the highs, so you got some people sitting on some profits. They're taking them. If anybody who's in this thing, they're taking it. Then I'm talking about the people who bought this thing 2 weeks ago. Those profits are all gone overnight here. So right back down to the low of the move. I think it's good support 157. Other than that,
it's a tough one. Is this a spice company?
Yeah.
Yeah. I don't know. You had a step down seller. I mean, he just wanted out and there was nothing there. And he just kept on offering it lower and lower and lower until he finally got done on his piece. I mean, not many shares have traded. You're on the rebound here. So now that you have a couple bucks off that pre-market low, Dennis also mentioned the daily lows here. The longer it takes, I got 156.90 is 156.80 is the low. So $5 off the low. I mean, if the big seller comes in again, you may see it, but just looks like just drifting higher right now in MKC.
Hog. It's another ugly one. A stock that's just been a perennial dog. I mean, I feel like for decades here now. HOG was up at $74. I guess not decades, but years. $74 back in 2014. Here we are 6 years later, and it's more than a 2-for-1 stock split from those prices. It has never come back. It seems like every time it starts to get a lift, it just finds more sellers. Had a good October, ran from 33 to 41, then slowly leaked it back. Now we're going to be right back down at those lows here. once again, I mean, hog has just been a very big disappointment.
This is interesting because the EPS was quite good and the sales were quite bad. So there's probably some
They don't like bad sales.
financial engineering to maybe juice the EPS a little bit there. 20-cent EPS versus a 9-cent estimate. Like I said, that's great. And the revenue was not great. $874 million versus $918 million estimate.
Whew, boy, oh boy. I've seen this thing.
Why is it going to rally? Maybe bounces, but there's so much overhead supply. So many people have been beat up in this thing. There's so many better places to put your money than HOG. That's my thoughts.
31.64. It stands as your pre-market low. You're not that far away from it, so that may come into play. On the monthlies, if you're looking for monthly support here, you got to look under $31 back in September. 30.75. That was your monthly low. August was 30.17, so only a couple bucks away from it. Maybe not go there today, but that line, if you're looking longer term here, I'd wait to see this thing under 31 in the $30 handle as the major support. S&Ps 2 points off the session high. We're trading at 61.75.
Durable goods just came out. They were good.
Yep.
So a little bit of a catalyst there.
Well, let's do one more earnings report before we go to grab our guest. Just had a few pulled up, and I don't know. Where do you want to go, Dennis? We can go to
F5 Systems from last night, F5 Networks.
Oh, okay.
I was long this for a while, and I actually sold it on the gap up day on earnings day, and I don't remember the reason. I remember that the earnings I thought weren't great, and then for whatever reason, it still gapped up like $7, and I sold it out that day. 150, I think I got right on the, you can see on the day, October 24th. I never got back in. I thought about getting back in. I mean, you get back down to this 120, the low back, and I actually got very close to the low of this thing when I bought it. I played it really well. 121.36 is the low. I mean, we're $5-6 away from there. Get down there, maybe it's interesting. I mean, there's a lot of value here, but the growth has always been the issue with F5 Networks.
So the earnings were good, actually. The EPS beat the estimate and sort of the sales, but they came in with some light guidance there. Q2 EPS guidance, the range they gave was $2.14 to $2.17. Estimate was all the way up at $2.44. So light on Q2 EPS guidance. Sales guidance was fine. Everything else was fine. It was just light on the EPS guidance for the current quarter.
It makes a lot of money. I think it's trading 12 or 13 times earnings. So definitely a cheaper multiple. But again, the growth's not there. So that's why it's got the cheaper multiple. It's interesting down the low 120s where you got that low back in August, I think. I don't know if I'm stepping in here at 127.
Yeah, let's see here. Dennis talking. There's some monthly lows at 26.51, and then look out, Loretta, all the way down to 121.36.
That's the number I like.
Yeah, that's your August low. You do have a little bit of confluence here. Your pre-market low, wow, that was 125.95, so that's in the area. For me, the interesting number right here is 128.5. Since we've had that bounce, well, there's not much volume trading here, so I'm not going to put a super lot of significance on it, but just seems like, there's someone selling here at 128.5. So if you break above that, get some of these losses back, but you're resting too close to that pre-market low for me to say, I think that low is going to stand for the remainder of the session. We'll see what happens when the real liquidity comes in.
All right,
so
let's bring on our guest.
Nick.
Yeah, let's bring Nick on. Nick Chahine is the author of Create Income with Option Spreads and sellspreads.com. Joined us every other Tuesday at 8:35 to give us his thoughts on the market. Nick, good morning.
Good morning to you.
We've been talking a lot of coronavirus and now some earnings. What to you is the more important?
Yeah, Nick is the voice of reason.
I want to hear the voice of reason.
Come on. Can you calm Dennis down, please?
We weren't sure.
I'm nervous.
Well, he's nervous because he's a dad and he's worried about his son.
There you go. And it's true. And my wife said the same thing.
And that is why you just refer to the charts and trade the levels as they are. And
what do you got for me?
Okay, so for today, the bounce is nice, but you have clear lines that they need to cross. If I wanted to just draw one line, it would be somewhere around 32.66, 67. And the whole last few hours of trade is kind of like an inverse head and shoulder. So if they're able to take that area out, they can fill the gap. But then up at the gap, they would be 3280 to 3300 is a tough zone just because of what I see. And so that's from the upside perspective. So it's important to know when not to chase. And it's important to know where are the absolutely need to hold levels and where would be the next level below that. And if you do that, then you can ignore the headlines, because the headlines don't bring new prices. They most often just expedite whatever was going to happen. So I wasn't a genius in the last couple of weeks when I said I'm starting to build some various positions. I bought some SPY puts and put spreads and sold some call spreads. I wasn't fully bearish on the market, but we were riding it long for a long time. As you know, I've been saying, new highs.
Yeah.
And then we started building. So yesterday was a good cha-ching day, whereas people that are buying the puts we're selling were people panicking and reacting to the headline.
So my question, I just don't want to interrupt you too many times, but
yeah,
like, why did you cover? I mean, what was it? Was your
I didn't cover.
Okay.
I booked profits, but I left runners because I do have levels. So like in the SPY, for example, I know that 328 and a half-ish zone is going to be difficult. And if you take that out, 332 is going to be difficult, clearly. But this week is very binary. So I couldn't stay, I wasn't shorting the market.
Yeah, right.
I was trading the levels. And, this is a gambling week. Talk about the big, huge market cap swings that could happen on earnings, and the Fed on Wednesday. So talk about not knowing which way it's going to go. Nobody can tell me they know the outcome of this week. But I can tell you that Facebook is probably going to demolish the earnings. They're going to crush it. Because their advertising reach is, I have somebody in my chat room they spend 7 or 8 figures on it, whatever. They're responsible for spending advertising for the giant company on Facebook. And he says they do nothing but Facebook now. And I personally fell for 2 or 3 of their ads on Instagram, and I'm only on Instagram for my gym, like 3 minutes a day. So I was like, if I fell for it and I never buy anything off of advertising, they are crushing it. That's my thesis.
They're awesome at figuring out what you want to see in those ads. I mean, it's unbelievable. I feel like we talk about some on this show, and then it's in my Facebook.
They are listening on their phone. my son told me that last year. They'd be talking about stuff with his friends, and suddenly their ads on Snapchat are exactly but Snapchat doesn't do as good a job. And the same person did try Twitter and did try Snapchat from my chat room, and they didn't get results. So they stuck with Facebook. I think Google's in trouble if they don't find new streams. If their management, the new shakeup in management, if I can call it a shakeup, they're in trouble. So Facebook, I know, is going to crush their earnings. Apple could crush the earnings. We don't know. Apple is now like 40% higher in value relative to itself. Like it sells at a 6 times sales versus it used to be in the 4s, and like a 28, 27 PE. It used to be 18. It's not expensive, but relative to itself it is. But this is maybe a new company, so I don't want to short it based on that. So it may crush its earnings. So I don't want to be too staunch short. That's why I covered some, to answer your question.
So you're basically kind of neutral here. You don't have a bullish or a bearish stance, it kind of sounds like.
I'm trading the thesis and the ranges. So I'll give you an example. A few weeks ago, I did a video for the members, and I said, I'm going along the TLT for the whole year, or at least half the year. Which that means I sold.
That's a bearish bet.
No, it's a bet on Tina. It's a bet that whatever happens, they're going to buy our bonds. That's my bet. And I think that'll hold up for the whole year. Unless Christine Lagarde starts raising their rates in Europe, they're going to have to buy US bonds. There is no doubt about it. And I said, if long markets, I can best protect my longs by going long the TLT. So I sold put spreads. I didn't buy calls. I sold put spreads. And then the TLT broke out on the chart, and I said, you can buy calls, and the TLT is going much higher. That was last week. And boom, that delivered a lot of profit. So these are bets. So now those put spreads are all paid up. And I sold call spreads to make them iron condors on some. Just spread, and today those will be green. I'll probably close those out. So there are things you can do that who cares what the headline says. So there's a thesis in Tina that was clear a few weeks ago, and that played out. And then the last couple of weeks, we said, okay, it's topping. I've hit all my targets. Unless they take the targets out with a trigger, I'm not going to chase more upside. In fact, I'm going to start building some bearish positions. I wasn't a genius at it. It was just logic. And I'm really I do watch the news. I do read the headlines, but I talk to myself in the third person to talk myself out of listening to these headlines. This virus, they don't even call it the right name. Coronavirus is the name for the whole
there's no name for it. Like
so I'm calling it the Wuhan virus. I don't know why they keep calling it the coronavirus. It's not the coronavirus.
Because SARS was a coronavirus. Ebola.
Common cold is a coronavirus.
Yeah.
So this is
I did that too. I did that in one of my articles.
This to me is the cold on steroids, and they'll figure it out. Yet gambling they're freaking out. So the gambling drops in the stock. This is where if somebody knows the company long term, they can make a decision that this may be a buying opportunity, but their foot traffic will be impacted because of the headlines. The problem is that the headlines are designed to freak us out. Otherwise, nobody would watch. If somebody said, a few sick, there's an issue in Wuhan and a few people are sick.
I think I want to just clarify something you're saying, because the media, I agree, the media is designed to freak us out. I make my living trading off headlines.
Yeah, but
I look at the Benzinga Pro.
So
I've traded for 10 years exclusively trading headlines, the information, the stuff that is like coming through the Pro that is fact.
So the headlines
but
about
when you
the
talk
virus.
media, like CNBC, that's a completely different story.
No, but I'm talking about all the headlines about the virus. They're inflammatory. When I write an article, I submit it, they never take my headline because it's not inflammatory enough. They always reword it and they put it in terms that catch eyeballs, like a call to action. Well,
you're still calling headlines something different than I would, though, because those are media. I just want to clarify something, because those are media, Twitter, clickbait. Like headlines aren't in Twitter. Headlines come from press releases, stuff from companies. So like when
those
I trade,
are included in headlines. Okay, so news headlines. How about that?
That's what the news headlines, like I'm saying, is like when you're Benzinga Pro. Like I would say right now, don't go canceling your Benzinga Pro. I make a lot of money trading Benzinga Pro. So I make my living every day trading these headlines. When we get 1,200 confirmed cases last night, we had a dip on that. They bought the dip. They turned around and started doing different things. But the market fell 6 points in a matter of seconds when those numbers came out. There are tradable events from the headlines that you get. So there's a difference between media propaganda and the press releases that are coming from the companies.
You can trade the headlines, even the bad ones, because if you know what they are and how they impact and where the lines that matter are on the chart, like I don't care what the headline is. If I see the ES go above a certain level or below a level, it's a tradable event to me. So what gets it above and what gets it below, I really don't care anymore. The only reason I would read the headline and take the information is to see what other people are going to be doing about it and see if I can anticipate some sort of an emotional response on it. So,
I mean, the reason I just want to give you more on the headlines, like, I mean, if you were just ignoring headlines completely, you would ignore all upgrades and downgrades.
I would 100%. I would never buy a stock based on an upgrades from some guy or person, girl. I don't know.
But it's not true, because if you were looking, you're going to look at your levels and maybe use that upgrade to sell on that level. But, there's still a reason that the stock is moving.
Yeah. So example, today somebody passed along, they're sharing information to help me trade Uber. Somebody upgraded it, said it could double or up 50% or something. It was like, now they love it. Uber. Now when it's approaching a really tough level, now they love it. So instead of saying, wait until it breaks through this horizon that we have here at 38, then there is the big rally from there. We start nibbling in or whatever. Now they say it's going to be up 54%. So some poor schlep reads this and they pile into Uber. Maybe it's a good thing to pile into Uber, but they need to properly frame it, and they don't. So I ignore the upgrades. I read them maybe if somebody puts them on my desk, but I definitely don't follow them. But
and there's different time frames for everybody too. I mean, Nick, and and I love Nick. I love your analysis. But traders do different things. My trading style and Nick's trading style are completely different. You're a technical guy. I'm a headline guy. I make my living trading headlines. You make your living trading technicals. So sometimes we're going to butt heads every once in a while just because our trading styles are different. It doesn't mean what you're saying is not relevant. It doesn't mean what I'm saying is not relevant.
We're not butting heads. We're probably doing exactly the same thing for different reasons. So, but the way you trade, you're actively buying and selling shares in quantities, I believe. So
and on the headlines, I'm trading on like the second it breaks. It's a speed game.
Most trading accounts are not that big, in my opinion. From the thousands of people that I've dealt with, most trading accounts cannot do that. Like I know I have friends that have trading services, and I think to myself, it's like, who can sell 100 contracts in a stock? Very few people can do that because of margin purposes. So they claim, $50,000-$60,000 in income a month, but they use $3-4 million in margin. Most accounts are not that big that are trading. So I see what you're saying, and you have your own method, and this is the point. You don't react and do something because somebody says do it. You do your own homework, you see the headline, you meld the two, and you act on it.
Yeah, I'm in the business of news interpretation is what I would say. I look at the headlines, I interpret, I think there's a thesis because of this new headline breaking, and I buy or sell the stock based on that. Right. So it's a little bit, it's like Discover Financial last night. I'll give you an example. I see an SEC filing comes out, we have insider buying happening in a stock that's depressed, probably going to trade higher here today. I buy it last night, and it trades higher.
Let's put this into, like, I just posted an Uber chart. If you put it up, just looking at the chart right now, because my investment is so long term, I'm not even looking at the chart. So I put a few alerts for myself. But if I'm looking at the chart, if I was that guy, I would say we see tremendous upside in Uber, but there are some technical levels to point at. A good entry would be at 33.90. As opposed to 36.30. So if it dips to 33.90, we're definitely buyers there. Earnings are coming up. They're kind of wild. So you might want to nibble now instead of just blatantly say it's going to be up 50, 54%. And then above 38, it probably has a $10 rally from there. So these are important things to add to just the typical headline. So I'm like on a crusade to tell people that if you follow the CNBC stream, for example, you're doomed to do exactly opposite of you should be doing all the time. So
if you're following opinions, I completely, and I'm on board with that too, because basically most of that, like when you watch last night, it's all opinions. I mean, we're opinions too, right?
So how many?
Do your own homework. Don't just say and do what we say.
Yes. So I use the unusual options activity on CNBC as a perfect example. They come out and say, unusual options, they're piling into an options contract, whatever, calls or puts, and they're buying the whatever. First of all, for every buyer, there's a seller. So they're buying and selling. The fact that one person is more different than buying, who knows which is smarter, the buyer or the seller? There's always, it's not an immaculate buy. They don't just materialize out of the blue. So there's a buyer and a seller. Plus, if you read any options books, or you attend, what's the first thing in the first paragraph to say? Most options expire worthless. So this is the definition of most. You're pointing out the leg with the most. That's doomed to fail just by the definition of how you invest in options. So do your own homework. You see a headline, the pros, the real pros, they look at it and they see if they can trade off of it. They don't see if they can pile into it. So that's my point. Do your homework and you will be prepared. Like people that bought puts yesterday, they're going to get stopped out today. And then they're going to repeat the process. They're going to buy puts on the next tizzy and they're going to get stopped out. So if you look at the options open interest into this last couple of red days, there was tremendous downside pressure, meaning the market makers were stuck wrong. And this whoosh down, they just handed it over to the retail. Here are your puts. So they fixed their position. That downside pressure is gone. There's slight upside pressure for this week. So
can I ask you about, people are asking about the TLT, and that looks like it's moved a little bit ahead, back up near all-time highs here. So I know that you were playing the other one, I'm sorry.
I did the TLT.
TLT. All right. going forward now here, how you looking at this?
So the TLT yesterday, I shorted it, but just to book profits. So it got into a zone to where onus is on the bulls of the TLT to break through it. So if I had bought calls off of my trigger at 139 or whatever it was, and then again at 140 and change, then I would be selling my calls out and booking them. And in my case, I was long put spread. I was short put spread, so long the TLT by selling risk below. I sold risk above way out in time just to make an iron condor out of mine. It was like in the 150s. So I'm okay with that. And on the chart, you can see that there's that 146 ledge. So in my experience, when they get to a ledge that big, it's hard to just blast through it. So the next, the higher prices from yesterday were going to be labored. Getting here is easy. Getting above here is going to be harder. If we get a big headline like you were expecting as far as that causes a whoosh down in stocks, they might be able to plow through it. But on a normal day, I expect resistance into 146 on the TLT.
And just real quickly, does that make you bearish banks?
I was bearish banks, and I believe I shorted Goldman Sachs for a trade. And then I decided that I don't know enough about their new retail thing, and I got out of it. But yes, I would not be chasing banks upwards. If they fall, I would sell puts into them because they are not expensive. Well, they are expensive now relative to themselves, but if they fall back to reasonable levels, I mean, they're not bloated. They have good balance sheets, etc. But Goldman Sachs was the guy I wanted to pick at, but then I chickened out. But if you twist my arm, I would probably short them.
Okay. All right. That was.
I wouldn't go long them.
Thank you, Nick.
Sure.
All right, Nick. Have a great one. We'll talk to you in a couple weeks.
Good
Thanks,
debate.
Nick.
I like it.
All right. Let's cover the M&A deal that we had this morning.
Sure.
We have not discussed yet. BorgWarner, ticker BWA, is acquiring Delphi Technologies, DLPH, for a total cost of $3.3 billion. It is an all-stock transaction, which means there is a ratio involved. Here is that exchange ratio. Delphi shareholders will receive a fixed ratio of 0.4534 shares of BorgWarner for every share of Delphi that they own. So 0.4534 is your ratio for traders who employ strategies like Dennis.
Like me, I love it when I get a new M&A deal. I've been hurting because all these deals have been closing. I've been losing all my deals. So I love risk arbitrage, and I love it when I get a new deal. So we're going to go, for you new traders out there, going to go 35.75, which is the current price of BWA, times the 0.4534 ratio, which is what Spencer Israel just told us, gives you a price for Delphi of $16.21. It's trading at $15.90, meaning it's trading with only a 30-cent discount, a 2% discount from the price, which is actually a little bit surprising that they're only a 2% discount on that. Usually it'd be a little bit less because you got time value of money in there, plus obviously you have the risk that the deal doesn't go through. So I'm actually surprised it's a little bit that high. But sometimes there can be other suitors that come in as well. So sometimes the risk arbs price them right up to these prices in those cases. But love it that I have a new deal to trade. BWA DLPH ratio 0.4534.
Have you ever seen a more horrible looking chart than Delphi here? Just going straight down since, I don't know if that was a reorg or a...
Auto parts producers have just been a mess. Anything to do with non-Tesla. I mean, you look at the chart of GM, look at the chart of Ford, and, obviously we're in the Motor City here, and we, there's a lot of people employed because of this business, the businesses around here. But I mean, the auto parts producers have just been an epic disaster. DLPH, same thing. So maybe this deal, like BWA, hasn't been, nearly as bad looking chart as DLPH, but maybe they're just thinking it's gotten so cheap that the synergies here just make sense. And maybe that is cost cutting efforts, makes sense. Similar businesses, it probably makes sense to deal.
And no, I mean, the Delphi chart just looks horrible, and BorgWarner.
Oh, it looks a little better today.
Yeah, you're not too happy if you bought this one, and BWA getting hit on this. I mean, I'm hands
Which
off.
isn't surprising.
Yeah.
Especially often on the the stock deals they get hit, but they get hit because the risk arbs are coming in too, right? They got to buy that up and they got to buy it in the ratio. So there's one of two ways you can do that, and usually they do the combo: is they bring down the acquirer and then bring up the acquiree. So, and that's where they're bringing it up to. So it's up 62%. They're paying a premium. So usually they knock a lot of that premium off of the acquirer right away. How much is the deal worth?
$3.3 billion.
Let's go take a look at what BorgWarner is, because a lot of times they knock, if it's a 3.42 billion deal or whatever, they knock 3.2 billion off the price of the acquirer. You see this happen a lot of times. It's amazing. They're knocking less than that though, because BWA's market cap was only 7 points. So I'm knocking way less than that this morning. So they obviously have seen the synergies as a good thing here. That's why BWA isn't down more.
All right, let's just look at some of the reports we're going to get after the close today. It's a big day. Apple, AMD, eBay, Starbucks. It's a big day for, and there are more. Those are just a couple, but it is a big day for earnings. These next 3 days, actually, today, tomorrow, Thursday, all big days for earnings.
It's going to be very, very interesting. And like I said, this is a beautiful setup, like I was saying off the hop. You could get a run up here today ahead of these earnings. Maybe there's some good reports. Maybe we bump up and get a shot near the highs again. My personal opinion is I think we're going to be lower in 2 weeks. I think the virus isn't going to get contained as well as everybody thinks it is over here. So I think it's going to give me a nice opportunity to buy some protective insurance or potentially put on some shorts. So SPY is trading up here this morning. I'm hoping the Apple blows away. I'm still long Apple, planning on staying with my Apple stock, but I'm looking more from an index perspective. We get up near 327, 328, 330 on the SPY. It sets up pretty well for a short.
Okay. All right. Then who else? AMD, I think, is after the close
AMD,
too.
eBay, Starbucks, who may provide some color about their operations in China. We don't know. But big day for earnings. Looking at the ratings here,
Sure.
Not a big day for ratings. The one that caught my eye was Canopy Growth, caught an upgrade from BMO to Outperform this morning. You don't see too many upgrades to pod stocks. So that one caught my eye.
And it's big Canadian bank upgrading Canadian stock. It will be impactful. You look at BMO, they don't move the US stocks as much as they move the Canadian stock. So this will move CGC here today. It's already trading up 4.5%. It's a nice lift for the stock.
It's had a rally and a pullback, a rally and a pullback, a rally, a pullback consolidation, big old rally, now another pullback. So it's trying. I mean, I would say, maybe draw a trend line off that panic low in the $14 hand or $13.81, connect that with the low at $18.50, boom, boom, boom. Your trend line goes right up at there. Kind of hit it yesterday. So that's what I'm looking for. I mean, it's trying to rally, and this certainly is helping today.
And then, MJ is interesting, and just while we're talking the pot stocks for 1 minute, this 16 was such huge support. And we've come all the way back down. We got down to 1660 yesterday. Now we're going to be lifted a little bit here with the CGC upgrade, and maybe that helps a little bit of the other stocks. I mean, if you're buying MJ at 17 here, you're out. It's below 16. So, and you've had a significant pullback here, so you're not chasing here now. I'm not saying these are long-term because I still don't like the cannabis sector long-term. I think the competition's too intense. But we were trying to squeeze them a little bit, and if you think, that those levels can hold, you've got a nice level to lean on in the MJ at 16.
10 out of 11 months in a row, not in a row, but 10 out of the last 11 months, MJ has traded lower. So maybe trend
is still not your friend. Yeah. Takes out that 16 Katie bar the door, we're in trouble.
Right. But if you're looking to be a little bit of a contrarian here, at least you got a good
level to lean on.
Yep. CGC seems to be the leader, in the bunch.
It is. Yeah, it is.
I played Tilray a little bit, but it's like, it's at 1 day, are you looking at a 1 day 22.5? Then you look at it's at 2070, and then
more wild
190. Then it's at, and you're like, I just it was more of just like, okay, I have some profit, I'm getting out, leave me alone. I don't want to look at the stock bounce around anymore. But CGC getting off the mat today. Any other ratings of interest?
There were a couple. We caught an upgrade to a couple of home builders. Who was it? It was Evercore upgrading Pulte to Outperform, and Meritage Homes, MTH, to Outperform as well. JP Morgan downgrading Diageo to underweight and Beyond Meat to neutral this morning.
That's interesting. So the Beyond Meat, let's talk that one because everybody trades that thing. I trade it too. It's not trading down on this.
I know.
This stock is still squeezing. It cannot, like, we haven't taken out the highs of the move, and it wasn't good that it didn't take the high out on the move on that candle 4 days ago. I'm talking the 135.23, then it got up to 134.70. So you get above there, though. There's no such thing as triple tops. I mean, again, from fundamental perspective, this makes no sense at all, but it doesn't matter. Fundamentals take a backseat always, especially when you're squeezing. It's not good news that this is downgraded. If you're bearish this thing and it's downgraded and it's not trading down, that's concerning. I mean, from the short perspective. So I'd say as long as this thing's above like 119.60, the low from yesterday, we could still squeeze them more.
All right, let's wrap things up here on this Tuesday. I don't know how to label it here. Is that a terrible Tuesday?
No, it's a
Tuesday.
Tuesday. It's a Tuesday.
Tester for the market Tuesday. That's what I'm going to call it.
It's a testy Tuesday. But thanks to our guest today, Nick Chahine.
I wasn't testy, was I?
No, you were fine, Dennis, as usual. Thanks to
the chat said I was testy. I want to test you.
No, the chat did say.
Thanks to everyone in our chat on YouTube and premarket.benzinga.com. If you click on the link in the description of this video to Benzinga Pro, it won't just get you a free 2-week trial. It will get you a discount should you want to continue your subscription to Benzinga Pro. So again, that link is in the description of this video. I want to remind you all about the upcoming Benzinga Cannabis Capital Conference in Miami, February 24th and 25th, benzingaevents.com to learn more there. You can always catch our podcast of our show or rewatch our show on YouTube. Give us a call, 734-494-0246. Shoot us an email, premarket@benzinga.com. And please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great day. We'll be back with you tomorrow.